Well, what can I say? It's been a crazy week here. If you've been more risk on than you've been risk off, I've been talking a lot about this whole risk on, risk off thing this week. And you can just pretty much see it here in the gold to silver ratio graph, which I actually neglected to show in yesterday's video. But pretty much since the start of July, it's been on a tear to the upside towards gold rather than silver. And again, I've made mention about the connection to the Delta variant. And obviously, we have a new catalyst that's setting this thing up, and that's the potential of tapering of asset purchases. Now, this past week, we kind of got a feel for that with the FOMC releasing minutes from July. And as you can see here, over the past 5 trading days, silver has been on a decline. And in addition to that, other risk on measures such as the S&P 500 on somewhat of a decline, pretty much down 0.5% over the course of the last 5 trading days. Not as severe as silver, which kind of makes sense, being that it's a commodity, but in that this is also diversified among it's actually over 500 businesses. So what can we take from this? Well, essentially, with the Fed putting this out now, if I were a betting man, which I'm not, but I would assume that the Fed put this out here to kind of get a feeler for things. How are markets going to react with us just even talking about tapering, not even announcing tapering, but just even kind of talking about, a timeline for tapering. And this is pretty much the answer that they got. They got red, essentially. So with this, a lot of analysts and reporters are noting that perhaps the Fed will likely not make any major announcements in Jackson Hole this month. And for any tapering that they may talk about in the future, they may actually just save that for September. And September is going to be potentially a wild month if there is another quadruple witching period happening then with, the amount of volatility that comes with that. But let's actually read here from this blip. The minutes caused hiccups in markets as investors reacted to the idea that the Fed will take its first steps toward peeling away the extraordinary amount of policy it used to fight the impact of the 2020 issue. Tapering the bond program could take months, but once it ends, it could herald the onset of rate hikes, which again would be pretty much, a headwind to rising prices in both gold and silver. But let's talk about the near term versus the medium term. So let's talk about the near term first. And I wrote this article here on my website called goldandsilvertoday.com. Make sure to check that website out. Pretty simple to remember. But I just wrote this article that came out this morning, entitled "If Silver Falls Below This Line, Bad Times Are Ahead." And within there, I point at two key levels of support for silver. One is a lot more important than the other. Now, if you want to check that one out, I will leave a link to it in a pinned comment underneath this video. So check that out. But in the short term, things are looking pretty scary for silver. But in the long term, I want to give you guys some hope here, because as far as the risk on environment is concerned and that helping silver out, we still have a lot more room to go. So here is the 10-2 yield curve. And as you can see here, we're still pretty low. We actually kind of, took a bit of a breather here from our ascent, and we're currently at 1.03, falling from 1.58. So we've been pretty risk off just generally for some time. There's been some downward pressure here. And as far as the 10-2 is concerned, when you see it steepening and rising, there's an expectation for inflation and just general expansion and the inflation that comes with expansion. Now, over the course of the last 5 recessions here that you see in this graph, I actually did some, um, probability weighted averages, and or just you could just generally say averages as far as what we could expect to see, um, probabilistically. And is that a word? Probabilistically? I don't know. I made it up. But anyway, I actually wrote down the peaks of each post 10-2 yield curve, post every recession here. And the recessions here are actually the gray bars. So over the last 5, and I am including the ones from post 1980 and also the one in the early 80s as well. Even though these seem, almost kind of like outliers here relative to the pretty consistent up down wave that you see in more recent times, I included that in my calculation. So in the most recent, great financial crisis, post great financial crisis 10-2, we got up to 2.84. Mind you, we're currently at 1.03. Before then, in the 2000s, we got up to 2.69. Before then, in the 90s, we got up to 2.57. And then here's where it got kind of weird. In the 80s, 1.56. And that really, really weird one was we got to a peak of negative 0.04. And if we were to average all this together and just weight them all equally, that means that on average, we could possibly expect to hit 1.92. Again, we're at 1.03 and we had a peak of about 1.58. So we're not, at least the peak of where we've been isn't too far off from that 1.92. Now, if we were to just strip out some of those really weird numbers that we had in the 80s, that negative 0.04 and that 1.56, I kind of look at those two as not being, being dissimilar to the most previous or the most recent 3 peaks that we had. If we were to just include those recent 3 peaks, then we could expect to see 2.70. So, I think we have a dispersion here if you want to, and also, I mean, if I want to right now, actually, let me just do this right now. What would the average be between those averages? So 2.0 plus 1.92 divided by 2, that's 2.31. So on average between those two, if we expect to hit 2.31, we're not even halfway there currently to that possibility. So all that to say, there's still a lot more room for us to go to get back to where we should be as far as hitting, a peak for the 10-2, which again would allow us to experience a little bit more inflation than we have been experiencing from economic activity. And that would be a benefit to silver in the medium term. Now, the problem that we might face is that will we even get to that if we start to see rate hikes, tapering, becoming headwinds for silver price action? Now, I do think that a lot of the downward movement we've been seeing in silver in recent days or recent weeks has come from Delta. So I think that a lot of that will kind of get pushed away once Delta, kind of recedes. But we'll see how things play out. This is a very new territory that pretty much we're all kind of sifting through. There's no historical data that we have on record to say how markets should react in the face of, a global health issue, especially with our economies being so interconnected globally. So there's that, guys. Make sure you check out my website, goldandsilvertoday.com, to check out this article here. And thanks again for watching.